And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge report. And this is the show where we put you in front of where the action is in the broader markets, as always, with an eye toward helping you outperform the markets by being prepared. So let's go ahead and get started. Take a look at some of the items that we are going to be covering today. As always, we're going to take a close look at the current markets, see where we ended the week, what we can be on the lookout for going forward. Also, again, it's all about quarterly results. Last week was a very pivotal week in the sense that we had many of the major mega cap stocks report. Next week, earnings picks up tremendously. A huge number of stocks due to report, but we will get into all of that. Also, runaway stocks and how to trade them. By that, I mean those stocks that have really responded either dramatically to the up or the downside relative to their earnings, because those were that was the area again that did see the most in the way of dramatic movements. So we'll drill down there. Also, which areas of consumer discretionary are benefiting, and by that I mean we're going to take a look at some of the economic data that was released last week. Pretty much all of it was consumer spending, consumer confidence related. So the consumers are out in force, and you want to be able to take advantage of potential moves in that area. So let's take a look at some of the data last week. We did see consumer confidence. It hit a 16-month high. And one of the points of relevance here is the fact that Wall Street was actually expecting a decline in consumer confidence. So we did see very strong, of course, we like to see consumers confident, more spending ahead. We did get the GDP report for the second quarter, and this number also, we are now above pre-pandemic levels as far as the US GDP, and this was also spurred higher by very big consumer spending. Consumer spending in that second quarter was 11.8% higher, which was very big, and this was 4 times greater than your typical quarterly spending. So again, good news for the economy as consumers are coming out, and also the savings rates are at historically high levels, so bodes well for continued movement there. We did get inflation report. Core inflation numbers did come out, and they were the 4th consecutive period of an increase in inflation. So we're now at a 13-year high. Again, all about Americans getting out, spending amid shortages, not only in supplies, but also in labor. The good news is with this inflation report that the markets, for the most part, shrugged. There is a sense that these inflationary pressures are going to be with us for some time until we get, again, the supply and as well as labor shortages out of the way. Fed Chair Powell, big news, came out midweek, and he did announce that despite the fact that inflation is coming in higher than he anticipated, the Federal Reserve is going to keep current monetary policy in place. And for the most part, that was calming for the markets and generally positive news. Next week, more economic data. We get the Purchasing Managers Index and factory orders, giving us a sense of that manufacturing area. Is there still expansion there? July unemployment, of course, we want those unemployment numbers to decline. So those are the primary items that are out reporting next week. So let's go ahead from here and take a look at the broader markets. This is a daily price chart of the S&P 500. We did end the week mostly flat, but the good news is that the S&P has remained above these key areas of support. For my work, it's going to be this 10 and 21 day simple moving average. Your RSI is positive, as well as stochastics. These are both momentum indicators that generally you do want them, of course, to be in positive territory. So the S&P is in fine standing. Let's go ahead and take a look at the NASDAQ. The tech-heavy NASDAQ technology stocks did underperform for the week. So we are looking again at a daily price chart. And we are going to be on the lookout here for the NASDAQ closing the week above this 21-day simple moving average. In fact, that was the case. The relevance here is because historically, when looking at the NASDAQ, that 21-day moving average is generally, when the index is in an uptrending period, it is an area that you want the index to find support, and it did. We can see the RSI and stochastics also both in positive territory on the daily chart. So by and large, the broader markets are holding in, and in the backdrop is constructive. So let's go ahead from here, because I always want to share with you what is going on beneath the surface. We're looking here at a 2-month daily price chart of the 11 S&P 500 sectors and sorting it using that RSI indicator. We can see your stronger groups are going to be up here in this upper left quartile, and then in the lower right, weaker areas where you're generally at this time not served to be involved. Of course, we always want to be on the prowl for where that strength is, with an eye toward participating in it. So take a look. We can see healthcare is up here in the forefront. It did outperform the broader markets. It was one of the top, it was the third best performing sector. We can take a quick look at the group chart here in a very nice confirmed uptrend. And this is all about earnings. We are going to get into that and take a look at some of the stocks that had explosive moves and what you can anticipate going forward. Technology remains here up at the forefront. It was down over 0.5% for the week, but for the most part, we can take a quick look here and we'll get into some of the subgroupings as well. But tech does remain in a very nice uptrend, perhaps a period of consolidation. This is your MACD momentum indicator. A couple of things worth noting. Financials were actually up this week. They're struggling. They're trying. We can see still finding resistance at this 50-day simple moving average, keeping a close eye on that with an eye toward a potential advance back into some of these cyclical areas such as financials. And then one other area that I did want to take a quick look at here is the basic materials. Now, this, of course, is a bellwether cyclical grouping, one of the only ones that really did turn positive this week. We can see it broke back above this 50-day simple moving average. The RSI up here trending upward in positive territory. The MACD had that positive crossover poised to turn positive. Now, this move is, we are going to take a look at gold. Gold had a good week, but also earnings related. A number of steel stocks came out with exceptional numbers that helped push these, the basic materials sector into bullish territory. So let's go ahead from here and take a look at some of those sub-industry groupings. We want to see how did small cap stocks fare, technology, and so forth. So again, that RSI, and then going to go ahead and update it. And we can see that software and semiconductors continue to remain up here at the forefront. And that is good news, certainly as it relates to the NASDAQ and growth stocks in general. Software stocks were down a bit this week, over 1%, but they are holding firm support here at this upward trending 10-day simple moving average. A couple of standouts in there that are continuing to outperform, but semiconductors had a nice week, up 2.5% as they continue to reverse this sharp pullback that occurred earlier this month. We can see semiconductors are breaking out of a nice 1-month base on volume, and this is all about earnings. We'll get more into that as we move on, but nice constructive action where positive earnings reports are being positively responded to, and that's what you want to see. We can see crude oil up here at the forefront, but it did close the week above $76 constructive, but oil stocks are not quite ready. They're not looking very constructive here at this point in time. But a couple of other things just quickly pointing out here. This is the US dollar. We can see the drop here that took place last week. And in turn, of course, that is good for commodities. I don't see it here, but we did see, of course, I mentioned gold stocks were up for the week. Let's just take a quick look at KRE, the regional banking index. The broader markets flat to down, but banking stocks up over 1% for the week, but not quite ready for prime time. What we're seeing is a number of regional and smaller and really bank stocks overall reporting very strong numbers, but their downward trend is still very much in place. I'll just take a quick look here because of the bigger indexes. The Russell 2000 was up over 0.5% for the week, but still finding resistance here. But I will say that the Russell 2000 is very heavily weighted as far as having small bank stocks, a big component. So hence we can see the index did perform relatively well with that positive move. So from here, what I did want to go ahead and do is take a very brief break. When we get back, I'm going to go ahead and share with you some of the highlights within the NASDAQ 100 and talk about some of those bigger movers and how you can trade them post earnings. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. What I'm sharing with you now is a view. I went ahead and put together the top performers in the NASDAQ 100. Just very simply put those tickers into a group listing. And now we are looking at the 2-month daily price chart. And let's take a look. These are your biggest movers. You can see these big, highly unusual gaps up. Well, no surprise, each of these bigger movers for the week were driven higher by strong earnings reports. So what I did want to do from here is go ahead and take a moment because we are still in the fairly beginning stages of earnings. So going forward, should you see this price movement and price action, how you can potentially trade these stocks. So we can start here with Align Technology. This is Invisalign. And so oftentimes you will see this is the initial response out of their earnings. So I'm going to go ahead and annotate this and give you an idea of what you can be on the lookout for when you see these advances. Sometimes they will be gaps up, other times it will very simply be a significant upside move. So with Align Technology, we can see that the advance subsequent to their earnings did push the stock out of a 4-month base. So this is very, very bullish when you are seeing stocks respond positively to strong earnings, whether it's gap up or otherwise. If that move in turn pushes the stock out of a lengthy base, that is oftentimes going to point to further upside. Of course, the broader market dynamics are going to have a play in that as well. But the other characteristic here is very big volume on this move. And of course, your outside momentum indicators are in positive territory. The good news here with this MACD is we had that nice positive crossover, but we are well below highs. We can go back here. This was, I always like to use historical precedent. This is a line when they had a huge quarter toward the end of last year, using that quite simply as precedent. We can see the early advance upon that gap up. It did break the stock out of a base. So here's what we can be on the potential lookout for as a common characteristic. Oftentimes these stocks will advance and sometimes trade sideways, but sometimes pull back to that 10-day simple moving average and then advance further. But you can see net over the next several months, the stock did in fact trade higher. So let's take a look also while we're here at if you are more inclined to trade immediately upon earnings when you see these big moves. Really quite helpful to then drill down to an intraday chart. I'm just going to put up a 1-hour chart here of a line to help, if you will, if you are perhaps a swing trader, faster in your trading activity. Here's what to be on the lookout for when you see these companies, and you can do your work the night before if they come out. Check on after hours trading, see how you can anticipate them opening. So this is the day after the release of their strong earnings on a 1 hour. So generally what you want to be on the lookout for after you see these big opening moves is if you get a third bar that prints above that first one. That's bullish. Generally, statistically, the stock will continue to trade higher from there, as is the case with a line. And then from here, it's going to be all about making sure that the stock continues to find support above. I use a 5 and a 13-hour simple moving average. When you get this dynamic where it breaks below the moving averages, your momentum indicators turn negative in conjunction with that. Again, super short term, it's telling you that a pullback is coming, if you will. But we can see too, the MACD on this intraday is really at a very high level. It just, unless we see a trending sideways period, we could very well see a line trend sideways into the beginning of next week. But by and large, huge volume characteristics point to further upside. That daily chart that we just looked at was very constructive. So let's go back to that NASDAQ view of the top, quite simply, the top gainers last week in the NASDAQ 100. And we can take a look at a couple of other names here. AMD, Advanced Micro Devices. This is one of the reasons that semiconductor stocks really came to life. They reported very strong earnings. I'm going to pull up a little bit bigger of a chart so you can see that couple of dynamics that took place here last week subsequent to the release of their earnings. In addition to the a breakout of this shorter term 1 month base, we also did incur also what occurred here is a base breakout of a much longer base. And the reason I'm pointing that out is because the longer your base breakout, historically, the longer your potential advance out of that base. And we're also getting these super high volume dynamics. We had that nice MACD crossover, again, from a relatively low level. We're not up here where, and it's where any further upside is conceivably not possible. We do also have historical precedents here going back to that late October period. So let's go ahead and quickly take a look at that intraday to kind of use as a guide going forward as we continue to proceed through earnings season. Here we are with AMD again on that 1 hour. Here's that 1, 2, 3 bar concept that did in fact point to further upside. And again, also very similar to a line, we can see that the momentum dynamics, we most certainly are overbought. We can see this is very natural for this MACD to, at the very least, trade sideways. Ideally, we do want it to come in a bit, allowing AMD to have a reset, if you will. And this is, if we do get a pullback, these are the dynamics you are going to want to be on the lookout for with on the intraday, breaking back above these shorter term moving averages with your RSI and MACD trending upward. So that's a look there. One other thing I did want to point out in this listing here of the top performers on the NASDAQ 100 last week. Sorry for all those charts. Oh boy. So I just wanted to point out thematically, it's confirming what we're seeing as it relates to industry group strength. We can see semiconductors, CTSH, not very constructive looking chart wise, but it is in that technology computer services area. So going back again, I did want to point out some of these medical stocks. This is DXCM, big move. I could take you through that very same exercise, but CGen is another biotech name, so supporting that strength that we saw in healthcare stocks. These are just a smattering of many names. My MEM Edge report had two winners last week, came out with strong numbers and are trading higher. And then XLNX, another semiconductor, as well as Qualcomm. So earnings, you can see front and center are the driver, because not only particularly KLAC, another semi, not just these earnings movers, but then you do see a drill out beyond that into other stocks within those industry groupings. So let's move on. I did want to share with you, again, using that NASDAQ 100, I went ahead and populated this candle glance view with the bottom performers last week in that NASDAQ 100. And take a look, big drop here, down. Actually, it closed a little bit higher than it had been, but Amazon down almost 8% on that earnings miss. Big news there. Facebook came out with stellar numbers, but they guided their growth numbers lower going forward. We are still finding support currently at this time, but when companies guide lower, it's not exactly what you want to run toward, if you will. Let's take a look at some of these other software stocks. This is Skyworks, did get hit on earnings, but the good news is buyers came in on the dip. So maybe keep an eye on this one, because big volume characteristics, that when the stock undercut that 50-day, lots of support coming in, but your outside momentum indicators do not look constructive. But I will tell you, within software, there are definitely better names where you can put your money to work. Now, this was a big disappointment. PayPal came in big earnings miss, and you can see this break below that 50-day. So anytime a company, whether it is well known or not, if they come in with earnings that are below and well below estimates, you are well served to, at the very least, lighten your position. If it breaks that 50-day, then more downside, again, statistically ahead, particularly as your outside momentum indicators are trending downward. Bigger point here, among the NASDAQ, the biggest gainers and losers were all earnings related. So you can see the relevance that it's taking. And this is even in light of how much we did receive in the way of economic and then Fed Chair Powell news. It is all earnings seemingly. So let's go ahead from here. What I want to do is take us Well, this was actually, as long as we're speaking of earnings and we talked about consumer spending, this is Chipotle, one possible way, but you will want to make sure that the market backdrop is behind you. If the company reports their earnings after the close and they are showing explosive growth, which was the case with Chipotle, what you can do conceivably is put a trade in after hours so that you'll get that first tick on the open. This is something that I did with Chipotle. And you can see that since then, I believe I'm up about 12% on this, just a trade that caught my eye. And you can see that it is conceivably poised for further upside. Again, that big volume. Also, other metric that had me getting into the stock on the open following earnings is the fact that the RSI pulled back. It was not in an overbought position. And then also your MACD had pulled back. It was not up at this super high level. So you're going to want to have those dynamics in place before considering that kind of trade. Also, Chipotle is widely viewed. It's a Wall Street favorite, so you will want that dynamic as well. So let's go ahead from here. I talked about consumer stocks, and I did want to point out one area within consumer discretionary. We're seeing that the purse strings are being opened, savings rates are high, consumer confidence is strong. So from here, what we are going to do is just take a peek in the discretionary. Now, they were the underperformer today, all about Amazon, but let's take a look, because a couple of ways we can do this. Initially, we can sort it by this StockCharts technical rating and take a look. Footwear up here in the forefront, and I will tell you from the MEM Edge report has 2 footwear stocks that are doing well. It's all about earnings. So again, from here, with this scooter rating, we can take a look and share with you some of the names in this footwear. So this is Crocs, and it has a history of producing and reporting very strong numbers, gapping up, and then generally trending upward. Here we are again here more recently, gapped up and generally in an uptrend. You're going to want to keep an eye on this MACD. If we get up to these higher levels, really there's nowhere to go but this sideways trending area that may in fact take place. Let's take a look at Nike. They actually had some interesting news this week, but this was one of the names that was earlier in the earnings reporting cycle, and it did have this big gap up here on their earnings. And typical, as I talked about, it will potentially trend sideways till that 10-day catches up. But Nike very much in an uptrend. This stock wants to go higher. Big sales in China and elsewhere, lots of growth taking place. The big hint here again on that gap up was this huge volume characteristics, and this overbought condition can remain in place. Oftentimes going to a weekly chart will give you even more confidence. After that gap up, your MACD was here at a very low level. I believe I have time to go ahead and share with you one other name here in the consumer discretionary area, footwear, and a lot of this is going to be outdoor related. Deckers came out with numbers, huge volume in a very nice, generally uptrending phase here. So for those of you who have not taken a look or trialed my MEM Edge report, I do have a special. I urge you to take advantage of that by using the link below. I'm going to be sharing with you a lot more in the way of dynamics taking place in the markets, where you need to be focused on in stocks poised to outperform. And go ahead and hit that like button if you like what you've watched today. And everyone have a great weekend. And I look forward to seeing you at next week's show. Take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.